Hello everyone, and welcome to episode 3 of Mata-Bytes. Welcome back if you have caught our earlier episodes, and welcome on board if this is your first time joining us. Mata-Bytes is an online talk show series where we answer bite-sized questions on a topic that you may find useful. I'm the commanding officer of Punggol MPC, which is Singapore's fastest growing residential estate in the last decade. And if you'd like to find out more about what I do in my life on a daily basis, feel free to pop by Punggol MPC's Facebook page and just look for my self-introduction in the first episode of Mata-Bytes. So today we are going slightly out of our comfort zone to talk a bit about a slightly more contentious topic. Are your investments into cryptocurrencies going to end up in a crypt? That's today's topic. Mata-Bytes hopes to provide some very quick answers to this, and we have invited Mr. Benjamin Goh from the Securities Investors Association of Singapore, or what we'll call SIAS. And without much further ado, I'd like him to just do a quick self-introduction.
Hello there, and thank you very much for having me, Gerald. So as Gerald has mentioned, my name is Benjamin. I'm the head of research and investor education for SIAS. What we do is, and for those of you who are my age or older, you'll remember the Crypt issue way back when policemen wear shorts. Sorry for the pun. And that's when SIAS was born. Basically, we are a charitable organization. We are a registered charity, and what we do is to champion investor rights for residents in Singapore. We also do a lot of investor education as well as collaboration with stakeholders like the Singapore Police, National Library Board, so on and so forth. So very happy to be here to talk about this cryptic topic, cryptocurrencies.
All right, so maybe we can just move right into the topic. So my first question for Benjamin actually is, what is cryptocurrency actually, and how do you earn money from it?
Sure. Cryptocurrency is a digital currency. So you might find it quite strange what I mean by digital. It is, a virtual currency. It exists in cyberspace. So when you think about currencies, you think about things like the Singapore dollar, Malaysian ringgit, euro, so on and so forth. Well, you do have a bunch of cryptocurrencies out there as well. You've got Bitcoin, Ethereum, Ripple, so on and so forth. And of course, you can use, these currencies like normal currencies to do transactions. All right. So you can actually buy and sell stuff using cryptos, depending on which country you're in. And you also can sell Sing dollar and, convert it to crypto. But there are some very big differences. So if you think about the Singapore dollar or all conventional currencies, they are centralized or centrally regulated. So usually it is the country's central bank, in conjunction with government policy, will decide let's say the supply of Sing dollar or Malaysian ringgit in the global economy. But for cryptocurrencies, there is actually no central control. It is actually managed by a network of peer-to-peer, very high-powered computers, and we'll talk about that in the next minute or so. So there's no centralized control, no centralized regulation, and hence, and this is why people kind of like it, there is no central regulation. All right. Another big difference is, of course, if you talk about conventional currencies, theoretically, there's an unlimited supply, because if the central bank or the government thinks that it is, there are too few Sing dollars in the global economy, they can simply, inverted commas, print more. And if there are too many, then of course they can retire some. But for cryptocurrencies, the supply of Bitcoins out there is really dependent on a very complex mathematical formula. So it's an algorithm. And the strange thing is that the more coins out there, the more coins people mine, the harder it is to mine the next coin. So at some point, we're going to get to a plateau where theoretically the number of coins out there will be practically limited. All right. And if you use conventional currency, let's say you go to a supermarket to buy things, they know who you are, they see your face, you give them your cash, you get your product, they give you a receipt and you walk off. Or if you use, let's say, a credit card, your identity is not anonymized. They know who you are. But for cryptocurrency, it's entirely anonymized simply because it's sitting on top of a technology called a blockchain. And I think if time permitting, I'm just going to quickly run through what blockchain is. So blockchain transactions is basically underwritten or basically supported by an infrastructure that's made out of nodes. All right, so you got nodes, which is a cluster of very high powered computers. And what happens is that whenever you want to make a transaction using a digital currency, the transaction will go through this peer-to-peer network consisting of all these nodes. And the strange thing is that then all these different computers will decide whether or not your transaction is legit, whether your transaction should be allowed to proceed, whether or not your status is verified. And how they do this is, again, all these computers will have to go through and solve a very complex mathematical equation. So if, let's say, your status is verified as a counterparty in the transaction and the transaction goes through, then all the details of your particular transaction will be added to the chain or the sequence of code that goes along throughout all the computers in the network. And that's why we call this the distributed ledger. All right. And because you have so many computers and it's very hard to solve the mathematical equation by yourself, that's why they also say that blockchain technology, it is essentially tamper resistant. It's hard to fake or come up with a fraudulent transaction. And that's also why the identities of all these people using Bitcoin as a means of transactions is highly anonymized because it's hard to crack the code. Yeah. So that in a nutshell is what Bitcoin is and how it runs using blockchain.
I see. So basically, if I hear you right, you can basically mine for Bitcoins and not pay a single cent for it, and you'll still get coins for free.
Well, you have to pay for electricity. So if you move to a place like China, but in China nowadays there's a crackdown, but the electricity is very cheap in China. That's why about 70% of the world's digital currency miners are based in China, or they were. They had to go out. Yeah.
Okay, so the next question that we actually have is, how is cryptocurrency different from traditional stocks exchange?
Sure. Okay, so I think the similarity here is that the prices of stocks as well as cryptocurrency, they are volatile, so they can go up and go down. But I think one of the big differences is that the performance of the stock is very much dependent on the performance of the company, right? So whether or not the stock price of Apple goes up or down depends on whether or not Apple makes more money or less money. The big difference is that crypto has got no underlying fundamentals. As in, at this point in time, it is highly speculative. So you can use some skill sets like technical analysis from the stocks world to analyze crypto, but essentially there is no economic report, there is no report by the company, so on and so forth. That also leads me to the second point, is that a lot of the financial products out there, for example, stocks, they are regulated by a market regulator. In Singapore, that would be the MAS, the Monetary Authority of Singapore, as well as the SGX Singapore Exchange. But cryptocurrencies, they do have their own exchanges, but by and large, they are not regulated. Globally speaking, the authorities are trying to kind of form some kind of governance framework, build laws around it. But not a lot of the countries have rolled out a regulatory regime yet. Singapore, we are, I guess we do have the laws already passed, which I think Gerald is going to talk about it in a few slides. But the application process is still ongoing. And the other thing is, of course, if you talk about stocks, Singapore stocks, you can actually use your CPF funds to invest in the blue chip Singapore stocks. You can't do that for cryptocurrencies. Again, the regulators are quite hesitant to include cryptocurrencies as an acceptable investment venue or asset class, simply because it's really too volatile. So I would say that cryptocurrencies right now reminds me of the internet craze, back in the 1990s before it ended up in the dot-com crash. So it's really Wild West. Very little information, a lot of players coming in. There's this huge FOMO, fear of missing out. A lot of retail traders are jumping in, but really nobody knows what's going to happen. So highly risky.
I hear you, Benjamin. So this actually means that without some parameters like how a company would perform, and while it still functions a little bit like a traditional stock exchange, this means that it's actually 100% sentiment based, and it's very prone to things like what we call pump and dump in the stock world, right?
Yeah, and also a lot of it is actually enabled by social media, because you talk about the traditional stock world, you've got research analysts that write reports based on fundamentals, and all these people are licensed. But for cryptocurrency, it's basically, my opinion is as good as yours, as good as anybody's. Yeah.
Okay, so we'll move next into the segment where some of the questions were actually asked earlier on via the QR code, and I think that will help start things running while the live questions are coming in. So I think first of all, we actually got quite a few questions on what are the control measures and regulations in Singapore. I think we got a question from Mr. Sivamani and Mr. Royston asking whether if there are any monetary agencies in Singapore that actually control cryptocurrency. So I think maybe I should take this question because since I'm the policeman here. To answer everyone's question, the short answer is yes. Cryptocurrency is regulated in Singapore to some extent. The slightly longer and more detailed answer is that cryptocurrency is actually governed under what we call the Payment Services Act, which was enacted in 2019. This act actually interprets digital tokens as any representation of value that is not denominated or pegged to any currency, which is something Benjamin shared earlier. They can be stored or traded electronically, and it's intended to be a medium of exchange. So these terms fundamentally represent what we know as cryptocurrency. The Act then goes on to classify digital payment token services under its first schedule as payment services. And as with all other banks and everything, it states that service providers need to be licensed in Singapore and comply with anti-money laundering and terrorism financing regulations. And some of these requirements would basically encompass customer due diligence and transaction monitoring. So offers for or issues of digital tokens or on the capital market, on the other hand, may be regulated under the Securities and Futures Act, but that's another story for another time because it's more for institutional investors and not retail investors. So I think on to the next package of questions that we have is that some people actually want to know, so what are some of the more legitimate exchanges that are around? We have a question from Mr. Samuel and Mr. Kevin, who asked which cryptocurrency trading platforms are regulated in Singapore? So it's a more detailed version of the last question. Maybe Benjamin, you can take this.
Okay, I'm gonna take a page out of your answering format. So the short answer is akan datang, as in we have to wait. And the long answer is simply because from newspaper reports, we know that there are about 300 firms out there that has applied to the MAS, Monetary Authority of Singapore, for licenses under the Payment Services Act, basically to act as digital payment services as well as crypto exchanges. So what's been happening now is that MAS has received all these applications and they're doing their due diligence. So it's going to take a little bit of time because some of these companies are actually very big companies. So they're going to take some time to go through it. So companies like Alibaba, Binance, Gemini, even Google's parent company, Alphabet Incorporated, has applied for an application to MAS to start a crypto-related business or exchange. All right. Now, the thing about the MAS protocols is that even though they have not received their applications, because they have already submitted it and MAS is looking at it, these companies are currently exempt from MAS license. That means they can already start doing the business. That's why you have got Binance, which has started Binance.sg, and also have kind of teamed up with CapBridge, which is a full licensed financial institution in Singapore, licensed by MAS. That means they can already start doing their business. It is only if, let's say, MAS comes back and says, no, sorry, we cannot approve your application, then they have to immediately stop. So that's why you can see all these names are already in Singapore, right? But since they are not licensed per se, we should, so Kevin has asked which exchange is safe, right? I think we should just use the traditional Singapore answer, which is like if you go to a food court, go to the store with the longest queue. If you go to the store with no queue, that means it could be a question mark. So generally speaking, just go with the exchanges which are basically have got the highest market share globally speaking. If you look at Binance, and I'm not recommending Binance globally, I think they are the number one by far and away. They are the biggest in terms of trading volume, daily trading volume. All right. Then of course you got other players like Coinbase. You've got Gemini, so on and so forth. But generally speaking, you go to the biggest players because it's not just because they're big. They also have been around for a long time. They've got the systems. You have the exchange with the wallet or the custodian that comes with it. So it's full package. And generally they have got more infrastructure to support the governance framework. So I would say just go for the biggest firms at this point in time.
So Benjamin, actually I read online that DBS has actually started a crypto exchange as well. What are your views on this?
I think that's probably a step forward, especially for Singapore investors, simply because DBS is, and, as you know, Singapore's biggest bank and is fully licensed by MAS already. So, which means that they already have the due diligence, the reporting systems, so on and so forth. So, if you start a crypto exchange, for example, I don't think there'll be any questions about whether or not they've got expertise or the compliance systems. I think it's kind of like already there. So that's great actually. So wouldn't have any totally comfortable with DBS doing that. Yeah. And now that we've talked about all these compliance issues and some of these questions about legitimacy and all that, I've got a question for you, Gerald, since you're the one wearing your uniform, right? So I've been reading normal Straits Times, and once in a while I see a story about some scam in Singapore involving cryptocurrencies. So, and it seems to be escalating. So my question to you is, how does an everyday person like me avoid these scams? What are some of the tips to look for, some red flags or telltale signs?
Okay, thank you very much. Actually, I think we had a few questions on this as well. I think from Mr. Sri Devi and Mr. Han as well. I think let me first outline the situation for everyone. We have had probably 15 cryptocurrency scams in 2018, 125 cryptocurrency scams in 2019, and last year it was almost 400 scams. And if you look at the last 3 years in totality, almost $29 million was lost just due to cryptocurrency scams on its own. One of the key trends that we have observed where these scams are involved is that victims are typically befriended on social networking sites or apps. After a period of getting to know this friend then starts to introduce them investments into cryptocurrency. The most common themes we hear is that this overseas friend that they just befriended is a licensed investor overseas, or that they have an uncle who is a licensed investor, and if you follow the uncle's investment strategy, you're bound to make money. Victims are then asked to start accounts on, like what you mentioned, some of the longest queues. So they actually start accounts on some of the better well-known platforms like Huobi, MetaTrader, or Binance, and they are asked to buy coins. So everything is fine and well for a start, you see, because everything so far I would say that is quite controlled. This is where the scams really start. Victims are then asked to download third-party apps or go onto third-party websites, and some of these websites have URLs that just don't make sense at all. Or they are asked to download APKs that are not even hosted on the App Store. Thereafter, they are actually asked to transfer their coins into the wallet of this other application. And they will start seeing the prices soar and everything. And thereafter, when they notice that they want to pull out their money, it cannot be done because none of these apps or websites are real at all. So some of the advice that we can give on safe investments, especially where cryptocurrencies are involved, right, is to exercise due diligence in understanding how these work, understand the risks involved, and make checks on the person, company, and platform that you're trading on. So I think like what Benjamin has shared earlier, if the queue looks very short, if you Google the URL and you can't even find it, and if you're given an app APK that doesn't even exist on the App Store, these are some alarm bells that really need to ring very loudly in your head. So, yep.
I think those are quite common sense tips, right? It's just like if you're not willing to pay some stranger, some creepy guys, bank account, then you shouldn't be moving your coins from your wallet to some stranger's wallet as well. I mean, it's just common sense, yeah.
Yep. So actually, I tried dabbling a bit in cryptocurrency as well. So in preparation for this topic. So from my own experience, right, exchanges tend to have very limited receiving accounts. I guess be it for stocks and shares or even for the crypto exchanges, there's normally a listed account on their portal. And if you notice that in this third-party application, you start making inputs of funds into multiple different accounts, right? This is an alarm bell that needs to ring as well, you see, because it just doesn't make sense at all.
Yeah, it just doesn't make sense. And, I think to add on to that, if that were to happen to a bank account, that would be, of course, questionable because it's kind of the basis for money laundering as well. So again, if we take that as a, kind of an analogy, right, then, that's common sense. Even for crypto accounts and wallets, you shouldn't be, doing that. It's strange behavior.
Yep. And we always tell people that if the returns that are promised to you are too good to be true, it probably is not.
Yeah. Yeah. So I guess all these common sense ideas, whether or not it's cryptocurrency or stocks and shares is pretty similar.
Yep. So don't get too affected by your sentiments. Really check, confirm, and recheck again before you do it. Let's move on to the live questions. Let me just pick up my handphone and take a look. We have this question from Mr. Sam Doha. May I know what's the basic difference between cryptocurrency and digital currencies? I think, Benjamin, this sounds like a question for you.
It's generally the same. So it's synonymous because cryptocurrency, the why it's called crypto is because it uses a mathematical algorithm. You need to solve it. So it's like cryptology, right? It's like code breaking. So you have got a peer-to-peer network that needs to use high power computers collectively in conjunction with each other to crack the code. And therefore you mine it and then therefore you verify the transaction. So digital currency is it's synonymous, but again, digital currency also encompasses things like US coin. US coin is basically a digital currency, which is something like Bitcoin, but what they want to do is to make sure that the value is always the same as $1. So it's more, real world applications. You also have got various governments across the world. For example, China, they are looking into creating their own digital version of the renminbi, the Chinese yuan, so on and so forth. So all those, when we say digital currency, cryptocurrency, it's kind of synonymous because the underlying technology is more or less the same. Right, it's just that who created it, how it's being used, so on and so forth. Those would be the differences.
So I would say like digital currencies are probably a broader and more encompassing term, and cryptocurrency is one of the smaller packets.
Yeah, I think that's a good way of putting it.
Okay, so we have a question from Mr. Sri Dayal. So his question is, the bottom line, the direction of cryptocurrency will go forward with regulations in the future. The banks have started to look into making cryptocurrency logic incorporate into businesses. This is not going to die, but come up with more regulations and protection of customers. So I guess this is probably a question on where do we think the future of cryptocurrency is going?
Well, I think it's going to go mainstream because now the governments are starting with their, they're putting in place their governance frameworks. For Singapore, we've already put in the relevant laws in place, and now the regulatory framework is kicking in gear. MAS is looking at applications. That's happening across the world, actually. And of course, going forward again, governments are also looking at creating their own digital version of their national currency. But I think the great thing is that unlike paper money or fiat money, is that everything here is digital. So once the computers are verifying the transactions, everything will be seamless. It's going to be extremely, extremely efficient, extremely fast. You don't have to convert money. It's all done, in the background. It's like you don't even know it's happening. And therefore, even in China nowadays, you can go out without your money, without your purse, you just go out with a handphone, you just zap. And that's how you pay for stuff. Of course, that is slightly different. They're not using Bitcoin. They're using, electronic money. It's like using nets. But what I'm saying is that going forward, you can use Bitcoin to pay for. I would say you can use Bitcoin to pay for a lot of stuff. You don't have to bring your credit card overseas anymore. Just zap.
Yeah, actually, as an investor and as a user myself, I thought actually it'd be quite interesting if I could like get a DBS coin, for example, and if I travel overseas one day when air travel opens up, I can just use this coin wallet to pay for my Grab fees or whatever it is. And even though the bank doesn't have a presence there, but because they recognize the coin, it just facilitates the exchange. So I don't have to carry cash anymore. But this will also mean that the coins will end up being pegged to a real asset class.
Yes.
As opposed to what's happening today.
Yes. So I think you hit the nail on the head because those will be the kind of digital equivalent of the national currency. So you have got a USD coin, which is the digital version of US dollar. Then you may have the SGD coin. And all you do is you just go and tap. And of course, in the background, the conversions will take place, all the changes in ownership, the settlement, all would be done. So not, you wouldn't even know it. It's transparent to you, right? So, our time, we go there and zap credit cards. Nowadays, our kids go there and use Alipay. Next time, doesn't matter what coin you have, you just hit and that's it. It's done. You get your stuffed toy from Disneyland.
Okay. And so we have a question on what's the difference between a bank account and a wallet.
Okay. All right. I think that's a great question. It is similar but different. I would say that the general term is what you call a custodian. So a bank account, the bank holds the account for you. The bank has custody of your money, all right. But the ownership, you are the owner, right? Okay. So in the stocks world, we also have got custodian. That's called the CDP, Central Depository, CDP. I forgot what that was. Goodness, 老人家就是这样了。But that is actually managed by SGX. So when you have a trading account, let's say for CIMB or DBS, because you trade, who actually transacts and holds your shares for you? That's the custodian, the CDP. All right. The wallet is the custodian for cryptocurrency, and that usually comes with the exchange you're using. For example, the very big ones like Binance and Gemini, right? It comes with a wallet. You can use a third-party wallet as well, but I would say personally, I think it's better to go with the exchange you're using, especially if the exchange is a big exchange, you trust it. Even though it's going through MES regulation, you trust it, then the technology will be seamless and all that. All right, so that's basically a custodian. So it's the wallet is meant to kind of hold your coins. So if you have a wallet, an independent wallet, you can use it to trade your coins in any exchange. All right, so it's a custodian. It's basically a basket to hold all your stuff and your coins.
I see. I've also heard that there are hot and cold wallets as well, because you mentioned that if you keep it on the exchange, then it's called a hot wallet, because you can still move your coins around. You can also download the coins into like a USB thumb drive, password protected. And actually what we've heard is that a lot of people have forgotten their password, so they have no access to their crypto anymore.
Yeah, I find it a bit funny, but it's kind of like having a wallet and then you zip it up and then you lock it, and then after you bring it around and then you forget where the key is. I think it's something like that. But there is I guess a benefit to having a cold wallet, because you're not online all the time, so you're less. The window to hack your wallet is far less. It's far smaller. If you're online all the time, it's an online connection, then obviously people know your IP address and whatever. So that could be a benefit.
I see. Yeah. Someone answered your question for you. CDP is a Central Depository Private Limited.
Private.
So
okay.
Yeah. So to thank the person who gave us some help today, we'll just give you a very cute police model car that I have here now. I actually have 3 questions from Mr. Yo. Let me just browse through them very quickly. I think the first one was what's the current rate of crypto scams? I think maybe you logged in a bit late. We actually answered this earlier. Just to very quickly refresh, we have lost more than $29 million to crypto in the last couple of years. And the rate is climbing. There are about 400 such scams last year as well. And is it safe to be used in Singapore? I guess we have spoken a lot about the regulations and everything. It's currently being regulated, but like what Benjamin has shared, because all these are exempt currently, while MES is still checking on their applications. If you really want to do it, like what he mentioned, maybe you want to go for the food store in the longest queue. And I think his last question would be, oh, that's it. There was 2, not 3. Oh, okay. So from Mr. Yang Zichong, is cryptocurrency considered an alternative investment, and how does one compare this with other alternative investments?
Okay, that's a good question. First off, I wouldn't say it's an investment. It's probably trading, even, and that's putting it charitably. Sometimes it's called gambling simply because there is absolutely no fundamentals. It's kind of like luck. You can use things like technical analysis skills. You draw charts to get indicators. You can use some of that, especially for the more mature digital currencies like Bitcoin or Ethereum. But there are like thousands of all these kind of things. So if you find a newly created Bitcoin that was came into the market 2 weeks ago, you're not going to have a lot of price data, so you're not going to have a chart, so you cannot use technical analysis. So really, it's just luck, right? And I think one of the scams, and I read this online, not really an expert on this, but it's the pump and dump scheme, right? So they created a new coin 2 weeks ago. They get onto the social media, they hype it all up. They say things like, "Oh, Nobel Prize laureate."
Oh, I think we seem to have lost Benjamin. So while we are sorting out technical issues, maybe I will continue with answering the question.
Created this technology is top notch. I'm not. Okay,
Benjamin, you're breaking up.
Okay, I'm not sure whether I'm on actually. Sometimes
Okay,
it
it's good now.
happens. Okay, so it's good. Yeah.
Yep.
So the thing is that it is important to kind of look at the biggest exchanges as well as the most commonly traded coins. There really isn't any investing aspect to it. You can't say that you want to put this alongside your stocks of DBS and Google and all that. It's I would say that it's that is portfolio management, that's investing. This is your gambling. It's the same as going to Marina Bay Sands and for have fun one evening, and that's about it. You I got in just for fun, and I'm already like lost half of it. But the thing is, it's fine because this is not my CPF, this is not my pension. This is like for fun. It's like ang pao money, like
Okay.
yeah. So even if
All
you
right.
lose 100, so if you approach it with that kind of perspective, then there wouldn't be so much of a heartbreak, when the thing goes down the drain. Okay.
So you don't invest money that you cannot lose, lah.
Exactly.
Okay.
so
Yeah.
that's
So
how
actually, I
it is.
just wanted to touch a little bit on this pump and dump scheme that you mentioned as well. So one of the observations that we've also had where investment scams in general are related is that sometimes people are actually added to group chats. I mean, you may find like a investing guru online recommended by a friend or something. They're added into this group chat on WhatsApp or Telegram, and this guru will tell you, oh, if you buy this share and you pour $50,000 into it, you were assured to make like 20% returns in the next 5 minutes, 10 minutes on the next day or so. What we normally notice is that some of these pump and dump schemes, right? They typically let you make some winnings in the first few runs. Thereafter, sometimes when the price starts going up, this guru will start telling you instead that, oh, don't sell it, don't sell it. Just hold on first. Maybe he's selling in the back end, but nobody knows. And then when the price starts to drop, they say, okay, now you sell it. And after many such cycles of losing money, then victims start to notice that, hey, have I been involved in a scam? So I would caution really being added into group chats where you actually don't know these investors, or some of them may have profiles that look really good online, but like we said, everything online can be fake. If you've never met the person, and especially if the person is not based in Singapore and nobody locally knows him at all. Yeah, so these are some really telltale signs of pump and dump scams that we really need to look out for as well.
Yes, I think those are very good advice, very good tips. Yeah.
Yep. Let's see how we are doing for time and questions. I think we are about there for time. Let's see whether we want to take one last question before we close today.
Sure.
Let's see. Okay, I think the last question that comes in from I think I would assume it's a Miss Lorraine. If countries eventually have digital versions of their fiat currencies, so will cryptocurrencies like Bitcoin, Ethereum still have a role to play?
I think the short answer is yes, because if you have a digital currency, digital national currency, it is going to be subject to the country's monetary policy and fiscal policies, right? So that means if, let's say, the US Fed wants to reduce liquidity, they can simply mint less US dollar coin, right? So again, that's going to be controlled by a central regulator, central government. I think the whole point of, or one of the key success factors for things like Bitcoin is because your identity is anonymous. It's your nobody knows who you are, and that's why people like it, right? So they can't track it, and of course, not to say that we're all drug dealers. We're not, but it's just that we don't like. And I'm saying this for the benefit of Gerald. I'm not a drug dealer, but the thing is that sometimes you just don't want Big Brother to see what you're doing, right? For example, if let's say you go to New York and you go to an adult shop, well, maybe I want to use Bitcoin instead of having the credit card transaction, show up on my invoice, right? It's one of those things, all right? So I think there's going to be a place. It's definitely going to be a place. And if you look at Bitcoin already, it's cemented itself as in a way, the forerunner, right? There's a whole lot of the industry has grown up behind it. So you got people that create the hardware that help you to mine. You got the miners, you got the speculators. There's already a cottage industry around it. So it's quite hard to kind of disrupt that. So regardless of what's happening in China, the government has cracked down on the miners, but they are moving overseas. So by the year 2022, I think the next 4 to 6 months, we're going to see a lot of the Bitcoin miners that were originally from China. They might end up in Norway or Iceland because it's cold. They don't have to pay so much for air conditioning, so on and so forth. And then that's when they're going to start cranking up the mines. And that's when, again, not a recommendation, but I suspect that's when Bitcoin will come up again. The whole problem now is that Bitcoin went down the drain because of the crackdown, but it's going to come back, I think.
Or they may end up in Singapore because there are no capital gains tax here as well, right? So
that's a great one. You should tell EDB or something. They can go to Beijing and shout about it. We don't have capital gains tax. You should come to Singapore. Yeah.
Okay. So I think we're about there for the questions that came in live and for time today. We overran by a few minutes, so thank you everyone for staying with us. And thank you, Benjamin, for your insightful sharing on cryptocurrency today. So I hope everyone had a very fruitful lunch hour session, and apologize if we did not manage to take your questions today. So I think as a last line of advice before we close this question, right? I actually took this off MAS website, so it's not from me. Cryptocurrencies are not pegged to any asset and are very high risk in nature. So to avoid being a victim of scams, right? So always make sure you do your homework. Never move your coins from an exchange that is not reputable into another wallet. Correct. And like what MAS has mentioned, they don't believe that this is a investment asset category that is good for retail investors at this point in time. So if you really want to enter, please hear the advice well, and just tread with care as well. Yeah, and that's it. Thank you very much, everybody. We hope to see you in episode 4. We'll just keep it under wraps for now, and have a great day.
Thank you.
Okay, thank you.